Coming to 2009, and we saw that 29% bounce in equities on the local markets. So all the panic over 2008 pretty much reversed. Where do you think we're headed now?
I think the PIC is in the market for the long haul. So we long-term investors. And so there has been some recovery at the moment. The question is, what do we think is going to happen to equities in 5 years' time? Because we long-term holders. And I think that it is inevitable that we will come out of, we're coming out of the recession, that the economy is recovering, and that over the next 5 years, although there will be peaks and troughs, the general direction will be upwards. And so we're quite happy with that situation.
So you don't feel that it could be like a Japanese scenario and equities perhaps don't recover over the long term if we see them falling substantially from these levels?
No, I think what the indications that's coming out of the market is that equities have recovered with the small increase in GDP and have, as you said, have increased even in this year. So I don't think that we have a Japanese scenario. You must remember that the Japanese economy is very different from ours, with a lot of the old people investing their money in the markets and being very, very sensitive.
What about savings in South Africa? We've got a dismal savings rate, and this could be something that perhaps down the line you will champion.
Yes, and you know, whenever we've had the opportunity, we've spoken about savings, but the government of the Republic of South Africa has a wonderful instrument out there called the government retail bonds. And I think that the uptake of the government retail bonds could have been better because those are guaranteed by the sovereign, they are government guaranteed, and you can invest as little as I think 1,000 rand in the retail bonds, and they offer excellent returns for individuals. Somehow I think all of us have to forget our petty interest in the market and encourage especially the small people who have the pensioners and so on to put their money into retail bonds. I think the uptake should be better, could have been better than what it has been. Although the government has done sterling work, I have bought a few for myself. The administration is superb, and they tell you every 2-3 months how it's performing, what interest you've earned and so on. And the inflation linkers, for example, they have retail inflation linked retail bonds.
So do you believe that that's the solution to the dire savings situation in South Africa, government retail bonds?
Yes, as a start, because what people want is they want secure investment products. And they do not want products where people are going to take their money and play the equities market and come back to them and say there has been a recession. And so the government bonds will pay. The worst that will happen is that if there is an adjustment of the repo rate, they may be adjusted minimally, but that is about it. Otherwise, they will pay, and they will give you what they promise you, because they're backed by the sovereign.
I'm interested in your opinion on interest rates in South Africa. You mentioned the repo rate.
Yes.
The FRA market is calling for another 50, well, is indicating that we're going to see another 50 basis point cut in interest rates in South Africa. Do you think we've reached the bottom?
Well, I will rely on the governor for that. We will take direction from the Reserve Bank. I think it is better for me not to speculate what she's thinking. However, given what has happened in the past, I wouldn't dismiss Deputy Governor Guma's remarks recently in Australia very lightly, and so yeah, that's all I will say, that he probably knew what he was talking about.
With 750 billion rand, perhaps even above that, behind you, and you account for some, well, the PIC money accounts for some 10% of value on the JSE All Share. Do you feel the power that you carry with you in South Africa? You're widely quoted as one of the most powerful captains of industry in this country.
I think that is a bit overrated, because the reality is that that money belongs to the government employees pension fund mainly. And in fact, we're just a post office. They give us a mandate, they tell us what to do, and we just tactically execute the mandate. I do not personally feel any different from what I felt before I came to the PIC, or before people realized the assets under management at the PIC. In fact, I think it's a bit overrated, because there is very little that we can do.
You've got your clients' mandates to fulfill.
We've got a client's mandate to fulfill. The portfolio is so big that you're not agile, so you can't jump around and do things that are spectacular. I think the best you can do is make noise like we have been making on the sidelines, but there's very little that you can do. You're not as agile as a small asset manager.
Many of those asset managers in the private sector watching this interview this evening are going to really listen intently when I ask you the next question. How do you make your asset allocation decisions across different private sector asset managers?
We've just done that, and we had a tender. We invited people to show us their credentials. We investigated each one of them, and we then allocated on the strength of the managers. In the past, it was just the big five, but we've just revised all of that, and we've just had an equity tender that was completed last year, and we also have a few asset managers under incubation, which are the BE managers that are coming up. Yes, and we have